Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat.
Paris milling wheat. Much as Chicago and Kansas City wheat, this market is the story of three patterns, though not necessarily channels. Firstly, and the largest, is the late June to early September bear channel that morphed into a descending wedge pattern. Then there is the dark blue highlighted early September to mid-October expanding wedge pattern, number 2. And finally, number 3, the most recent and the shortest pattern, is the mid-October to date bear channel, currently 217 to 228, that together with the expanding wedge pattern have made a V-top pattern together. Unlike some of the other wheat markets, prices here are still progressing down this newest of bear channels, dipping below the significant medium moving average, currently at 228, and the gold long moving average, currently 227, but not as yet stabilizing below them. We have significant support further down, specifically the May 2023 low at 221, and especially the 50% absolute Fibonacci line at 219. However, prices have done some pretty good work tackling, if not completely breaking, these moving averages, currently between 227 to 230. Now, for the early September to mid-October expanding wedge pattern, we have some potential targets below the market which are still alive and outstanding. A primary target X in the 217 zone, and a secondary, harder to reach, target X1 down at 208. Interestingly, I suspect the best supports for this market are from where we are now down to the 50% absolute Fibonacci line at 219. And that it might be easier to reach target X and target X1 should prices manage to drop below the 50% absolute Fibonacci line. We'll see if this comes about should prices venture that far down. Minneapolis wheat. This market is a little different when compared to Chicago, Kansas City, and even Paris wheat. You see here, the core recent pattern is a very large one. A sideways expanding wedge pattern highlighted in dark blue on my daily chart, currently 558 to 689. This pattern is still alive, though I have finessed the upper trend line a little today. There's also a much larger pattern, one I've been discussing in my commentaries for months now. A descending, expanding wedge pattern, currently 669 to down off the bottom of my daily chart. The upper trend line is highlighted in bright red and has been escorted and reinforced since at least late last year, though not very well I have to say, and that's by the declining long moving average, currently at 653. I've kept this breached, large, original descending wedge pattern still on my daily chart, as the others that were here, originating from August, September and October 2023 through to April 2024, have all been thoroughly broken, and this largest one is still here even if it was previously breached, more as a just-in-case situation. Going back to the market action, prices turned higher from a small V-bottom in late August, prompted by the purple highlighted September 2019 today uptrend, currently at 598, into an early September to mid-October scrappy ascending wedge pattern, expanding wedge pattern. Unsurprisingly, this peaked in mid-October, capped by the bright red neckline extension, turning lower and creating an October-based bear channel, with not quite the integrity seen here for a V-top, as we have seen in other weak markets. Indeed, the bear channel, currently at 595 to 623, is under serious threat, as prices seem reluctant to move down towards the purple highlighted September 2019 to date uptrend, currently at 598. However, we still have outstanding potentials below for the September to October based small ascending expanding wedge pattern. These are a primary target X in the 596 zone with a secondary target X1 down in the 563 zone. A much harder to unreach, but there it is. Now, you may argue with me that I'm being overly generous on the downside, and at most the secondary target should be down in the 604-605 zone rather than both being below 600. And to be honest, I can see your point. However, I'm minded to measure from the base of the late August V-bottom for now, though I would thoroughly see your point and be corrected if it comes about that we cannot move down below the purple uptrend, in which case I will finesse the targets. London UK feed wheat. I'm sorry this chart is so colourful, messy and condensed, but there is a lot going on here in a relatively narrow range. There are two competing patterns here on this daily chart that are seemingly fighting for the future of this commodity. There is the original dark blue significant early March to late June bullish Andrews pitchfork, with the market currently testing the combination of the lower time currently at 179.80 and the flatlining long moving average currently 178.80. To be honest, prices have been testing these supports, or at least threatening to test these supports, since late August. Then there is the more recent pattern, the bright red late May to early July bearish shift pitchfork, with the market in between the upper time above currently at 189.40 and the middle time below currently 171.60. I have said now for months that the gold long moving average and the dark blue lower time were the last supports I had in this market, and it seems that they are being heavily pressured by the bearish bright red shift pitchfork, enough that though where they are close together they might still succumb to the bearish pressure. Watch this space. Now, the three most recent iterations of this market are the July to late September descending wedge pattern, which to be honest doesn't look that great. Then there's the island top over early to middle of October with a potential target X below in the 169.90 zone, and then the October to date bear channel, which we are still well within, currently 173.5 to 181.05. I have some doubts about the bear channel, but I will go with it until something better comes along. As for targets, well, it does look a little optimistic, but that is because I am looking at it from the perspective of being above both the dark blue lower time and the flatlining gold long moving average. Should these two give way, then it would gather a completely different perspective. So it's important to see if the last chance bullish supportive pattern manages to hold up repeated attempts at breaking it lower.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.